Welcome to another eTruckBiz webinar. Today's presentation covers the benefits of offering your employees a 401k plan. Plus, there are tax savings opportunities for business owners too. We're joined today by two experts, Dennis Isabel and Josh Wolf.
My name is Dennis Isabel, and Bob Best and I have been working with Jeff and with Ben about finding a competitive carrier for this 401k offering. And we're financial advisors, and we promote, sell, service, educate participants in 401k plans. And as we went through this whole process, trying to find a provider, it was very much in the closing hours that we met with Tag Resources and really looked at Josh's company and their offering, and we're really quite impressed as far as, it's not always best to just go with the cheapest plan. I mean, we're really looking at value. And so when we're interviewing all these different providers, Josh's firm is really, when you look at the price that you're paying, which is very, very competitive, and then all of the other added benefits that simplify your life when administering a 401k plan, I feel that using Tag and Transamerica is a really good fit. I wanted to really just kind of talk about the reasons why you would want a 401k plan. A 401k plan is, a part of the tax code that allows employers to offer their employees a benefit to defer part of their pay. You can offer a match if you want to or not. We highly recommend that you do if you can, because it really enhances participation in the plan. And that's really what this is for. This plan is going to enable your employees or give them the greatest opportunity of having any chance of having meaningful retirement assets because of the fact that it's done via payroll deduction. It's kind of done for them. And again, that's why we think this relationship with Tag is really going to help with that, because they have a lot of technology and benefits that can be used to really improve the employees' outcomes, whether it comes from the record-keeping side or the investment side. And they're really trying to get business owners to adopt, thanks, Josh, you read my mind, by getting employers to adopt 401k plans. So if you could go down to that, I just want to go over the two items here. The increased tax credit and then the automatic enrollment dues were just recently enacted at the beginning of the year, where you can get actual tax credits. You can see here a minimum of $500, possibly up to $5,000 to adopt a 401k plan. And so that tax credit is really powerful. That's not a tax deduction. That's an actual credit from the taxes you owe. You can get it up to, 3 years in total for adopting a plan. This credit alone can really cover a lot of the administrative costs and things of having the 401k plan. Also, if you were to implement what we call automatic enrollment, which is the second paragraph there, you can receive another $500 tax credit on top of that for making sure that your employees are automatically enrolled into the 401k plan when they are eligible. So eligibility can be established by each of your businesses however you see fit within certain limits. And once the employee meets that definition or those rules, they would automatically be enrolled into the 401k plan at certain parameters that we would set. But basically what that does is you get another $500 credit for implementing that type of plan, because obviously the government wants to make sure that people are getting into and participating in these retirement plans. So there's a lot of incentives involved, and you get that for 3 years as well for implementing a retirement plan. So I just wanted to kind of, lay the little groundwork. Josh is going to really kind of get more into all the advantages and the features of the TAG program. So if anybody has any questions, I don't know if you want to have them open for any questions now or wait till the end, or, however they come up, please don't hesitate.
Okay, perfect. This is Josh from TAG. Can you guys hear me okay on your end? Okay. Perfect. Well, obviously just wanted to start by thanking, Dennis for the intro, Ben for the intro and help, and everyone over at eTruckBiz for the opportunity to work with you all. What I want to speak to you about here today is, what we think is the, top end-to-end retirement solution. You've gotten a little bit of information so far from both Ben and Dennis, and I'm just going to start by talking a little bit who TAG is and what our program looks like to you as the employer. So feel free to ask any questions either through the chat bar, and I'm happy to answer them along the way, or maybe save them for the end of the presentation. But we really feel that our solution is applicable to any size employer, but it's especially effective, we think, for those employers who need the administrative assistance in running a 401k plan. Maybe you don't have the staff who has the expertise for a 401k plan, or maybe you don't have an HR person at all. That's what we're here to do. TAG acts as your 401k department. So we essentially will bolt on as your retirement provider. We're going to handle all of the day-to-day administrative tasks, and we'll talk about what those look like here in a couple of slides. But that's what our company has set out to do, is to help solve the retirement crisis that's going on by helping employers offer this great benefit to their employees without having to get into the day-to-day administration and the pitfalls that come with offering a benefit that's sponsored through the Department of Labor and the IRS, which has many rules and regulations. So let me talk a little bit about what the TAG retirement program solution looks like. I think what I always like to start with is just 5 rhetorical questions to see comfortability or to get you thinking about 401k. So the answers to these questions would be pretty obvious. So do you enjoy working harder than you should, or making your employees work harder than they should? Do you want your employees to have responsibility, for something that they have either little or no expertise in? Do you want unnecessary liability? Do you want to be out of compliance with government regulations? Or do you want to pay more than you should for services? The TAG retirement plan solution is essentially retirement plan outsourcing. You're outsourcing the 401k solution to a company like TAG, who does nothing but run 401k plans. This is not just a portion of our business. This is our business. This is what we and my 100 colleagues out of Knoxville, Tennessee do all day, is run 401k plans. So it's very similar to the idea of outsourcing payroll or HR. And it essentially means that you take tasks that are time-consuming or require specialized or expert knowledge to do right, that are regulated by government or state agencies and are costly. But the key to operation is to have it done right. So TAG, again, essentially becomes the retirement plan department for your company. So what does this look like if it's done right? Well, there's really 4 things we've focused on that has to be done. It has to be easier. It has to be safer. It has to be, of course, compliance focused, since we're working with the DOL and IRS regulations. And it doesn't matter if you do all those things right. If it's not cost effective, it doesn't make sense. What we're going to do is look at each of these and a little bit more detail to talk about what and how this plays into the TAG retirement plan solution. So the TAG retirement solution is easier because TAG performs virtually all of the administrative work involved with running the 401k plan. Again, essentially becoming your company's retirement plan department. This frees you, your employees, everyone really, to focus on what they're good at, which is your company and your business. And TAG, again, performs this work with experts in retirement. So you don't have to become knowledgeable in investments. You don't have to create a committee that reviews the plan on a quarterly or annual basis. This program has a professional investment manager as an example of how robust this program is, that does nothing but review the funds, pick the investments to ensure that they're meeting their performance objectives, making sure they're not expensive, and taking on all the fiduciary liability for that responsibility. So it's easier. Again, taking away almost all of the administration work from you and giving it to people who are professional and have been trained in the industry to do the work. What does the administrative work look like? Well, this slide does a great job of outlining all the tasks that you would be responsible for in offering a 401k solution. So these tasks include fiduciary and non-fiduciary functions. If you had a retirement plan, you may have a third-party administrator who would be doing some of this work, but some of this work would be still in your plate as a company sponsoring a retirement plan. So all of those things come to TAG in our retirement solution. What we ask for are just the 3 things on the right, which is get us payroll data each pay period, which is an easy upload of a spreadsheet, which your payroll company or your payroll system, if you do QuickBooks, for example, in-house, that system provides you that spreadsheet. You have to monitor us, so if you see something you don't like or don't understand, we want to know what those questions are so we can make sure those are answered. And then at the end of the year, we need to get a year-to-date report from your payroll company so we can just make sure no data was missed throughout the year. So if you can handle those 3 things on the right, TAG handles everything that you see on the left. I always think it's interesting to point out that we obviously keep a very close eye on the Department of Labor, who govern these retirement plans. And the average right now is when they do an independent audit of 401k plans. They're always doing 67% of the time they do an independent audit. Those audits fail because the company didn't get contributions to their provider fast enough, or maybe they didn't file their Form 5500 quickly enough or on time. There's a number of pitfalls that come with running a 401k plan. Almost 3 out of 4 fail those independent audits. And TAG is, very proud to say we've never had one of our clients fail a DOL audit. So that's, almost 3,000 clients, a little over $2 billion in assets under management, where we have kept them compliant. So it's very important for us in our program to keep our clients protected from the DOL. And we're always interested to see how other clients are doing in comparison to our program. So that's always a statistic I like to share. The solution has to be safer. You have to provide a program that outsources most, if not all, fiduciary liability away from you as the company. So TAG accepts the administrative fiduciary responsibility, that being done by us being the named fiduciary in the plan and doing the day-to-day work. There's a third-party group named Mesero Financial who is watching those funds, making sure they're meeting their investment objectives and they're not having, very expensive investments on the platform. So as much risk we can take away from you that we're legally allowed to do, we're going to. So that's why we, again, feel we're the top end-to-end solution. And it's always great to point out, too, that in addition to never failing a DOL audit, we've never had a participant lawsuit on any one of our administered plans. So, again, it's safer for you as the employer. It's safer on the aspect of fiduciary responsibility, and it's obviously working because we've not encountered any litigation in our program. We, of course, need to make sure it's compliance focused. TAG's retirement plans are administered by expert staff who are trained in ERISA code. ERISA is the acronym for the laws that were created to govern 401k plans. So, we, again, have never failed a DOL audit, never had a participant. We're going to get the work done and done right. So we have ERISA lawyers on staff as well as on retainer, and again, staff that are trained appropriately to make sure that we're getting the work done and done correctly. Finally, the last point, it has to be cost competitive. Otherwise, sometimes that's kind of the end of the conversation. So our program is based upon a pooled concept, meaning that we have, almost 3,000 clients, and what we're doing is we're pooling all of our clients' assets together, and that helps us get leverage with buying power with our providers, with Transamerica as the record keeper, Mesero as the financial investment fiduciary, so that we can negotiate down pricing to make it very cost effective. So we use that pooled concept. So when you hear aggregated or pooled, that's the approach we take. So we can use all of our clients' power together to get the most inexpensive pricing that we can afford to offer to our clients. So again, when you look at the pricing aspect, you have to think about the time you're also saving in terms of running your business versus getting tied up in doing 401k day-to-day administration. And then if you were to go through an audit, we have the ability to offer low-cost audits because of the number of clients we have. Again, this program was built to help any size employer, but especially to make sure we can offer the most robust retirement program to any size employer. So really, in summary, our solution allows our clients to have what, we feel is, the easiest, safest, compliance-focused, and cost-effective retirement plan available today. I hope that presentation does a great job of explaining, what our program is and how that kind of dovetails from Dennis's points of why it's important to a business owner to offer a retirement program with respect to saving for retirement and retention. We try to make ourselves a very turnkey solution, or the easy button, if you will, for our clients. Happy to help with any questions that you may have with respect to the solution. Let me pause there and then I'll pass it back to Dennis or Ben with any maybe last comments and questions.
Thank you, Josh. I didn't mute anyone, so Amy, I think you muted yourself, but y'all have questions. Dustin, you were the first one on. Do you have a question maybe that Dennis or Josh could answer for you that wasn't covered in the presentation? And thank you, Dennis and Josh, for doing that. I learned a lot myself.
You're welcome.
Hi, yeah, this is Dustin here. I just had a quick question. You talk about lawsuits, and I'm not too familiar with these programs. So is that a common thing that there's some legal actions because of these programs being administered wrong or dollars not being transferred fast enough? Is that kind of what causes those issues with some of these plans?
Yeah, Dustin, this is Dennis. I would say, I mean, all of the plans that I manage, we've not had any issues as of yet. I probably will now since I said that. But a lot of the day-to-day operations, and again, this is why we really wanted to bring TAG in, can be problematic. I mean, if you, the big one, as you already mentioned, is timely remittance of the employees' salary deferrals. Those cannot sit in the company checkbook. They have to be submitted just as income or just as their taxes would be submitted. And so I think that's something where, there's also other possible liability with, the investments or sending out of notices, things of that sort. And Josh could probably speak more on some of those other ones. But again, that's why we thought in our conversations that we had with Jeff, a company like TAG where, I mean, usually a lot of times with a small plan, especially if it's a startup, you really are kind of on your own because of the fact that if we were to get all this additional help from a third party, and many times it can be cost prohibitive for a startup plan. But in this situation, due to the pooling that Josh spoke about, we're really able to offer a plan that is really affordable and really takes care of that. I mean, I can't say that lawsuits, and Josh, if you want to add, I'm not sure how often you've seen this, audits and things like that, but it's not something that is, I mean, it can happen every now and then, sure, but it's not something where you should be constantly thinking or worrying about having any sort of audit. I mean, unless there's some of those issues. If you're not sending in, employee contributions or some other issues going on, then certainly that would increase the chances of.
Yeah, I think you did a great job summarizing it, Dennis. I think, Dustin, for your question, where we see litigation is retirement programs that offer investment fee or investments that have very high fees, or to Dennis's point, contributions are not being remitted timely to their provider, so employees don't see the money in their account and they're missing out on market growth. Those are usually the most popular things that lead to that. So that's why in our system we have that 338 investment fiduciary to monitor the funds, and they're the ones liable for any sort of litigation that would come. And then TAG is responsible for politely knocking on your door via email or phone call if you're not remitting your contributions timely to ensure that happens. So we have safeguards in place to ensure that the popular reasons that lead to litigation, which Dennis mentioned, again, are very low and not often, but we have to be conscious and cognizant of it, that they don't occur in this program, and that's why we've never had that issue. You bet. Glad to help.
This is Ben. I've got a question. About how many hours per month would this take for, on the contractor side, for someone to administer or, to work with you guys?
Yeah, this is Josh. In our program, you would probably have to spend 5 minutes or less, and that's just getting your payroll data, whether it's from a payroll provider or from your internal payroll system, downloaded and then uploaded into our system. And it may even be less than that. You could probably do it in a minute or two once you're really good at it. Outside of that, that would be all we would really require on a week-to-week basis until we get to year-end, and we have some of those year-end chores to go through. So it's very low maintenance in terms of day-to-day responsibilities.
That's just, I think this is a real differentiator as far as a contractor in this business, because I don't think most of the people know this is available or have bothered to look into it. Josh, how would somebody get started in this? What would be the first step?
Yeah, I think the first step would be getting in touch with Dennis and or myself to let us know you have interest so that we can schedule a call to do a little bit of fact finding, like what are your goals in the retirement plan? Is it just to max out for yourself, or is it to provide a level benefit in terms of a match? So let us ask the appropriate questions so that we can design a plan that makes most sense for eTruckBiz customers or clients, and then from there go to the paperwork part. So I think the first step really is just getting in touch with Dennis and or myself.
My phone number is 419-535-123. And then as Josh said, we would just ask a series of questions and really make sure that this would be a good fit, and really find out what your goals are. And, that's the beauty of this is with TAG is, we're really getting a much pricing as if these were very large plans, but we're still able to customize each plan. Each plan it's not like a one size fits all. Plans can be designed in a way that best fits your company's needs. So I think that's my phone number and email on the screen in the bottom there, just to give us a call, and we can start the process, ask some questions, and just see if it's something that would make sense for you.
How much is there some sort of upfront fee or something you have to pay to get started?
There are installation fees, and it depends on a couple factors. One, plan design. Based upon your plan design, we can offer discounts or waivers of fees. Also, if you're planning on any rollovers from prior IRAs or other old 401ks that you may have, that could also either reduce or waive fees. So yes, there definitely are some fees up front that we would go through with you, but there are options or abilities to get around some or all of them just based upon, again, plan design, potentials of rollovers from you or your employees, et cetera. So we would definitely go through all of that with you as part of that consultation call.
So how much is a typical, do you know? I mean, is there a typical amount that somebody has 20, 30 employees, 10 employees, whatever, would need to?
Yeah, sure, absolutely.
Bring it up front.
Yeah, absolutely. And keep in mind the tax credits that Dennis shared at the beginning, where depending on your employee size, you could get up to $5,000 in tax credits to get most, if not all, these fees back. So with that being said, there's an installation fee of $1,000 that can be waived if you have anyone roll in $100,000 or more. That can come from one or multiple employees. So that's one way to get around that installation fee. That's a Transamerica installation fee. And then on the tag side, we have an annual administration fee. And if you adopt a certain plan design, which essentially means, if you adopt an employer contribution, our annual fee can be dropped from $2,500 down to $1,000. So to answer your question directly, most of our clients go safe harbor because you have owner or owners trying to max out, and they want to not have to worry about certain aspects of IRS rules with respect to discrimination testing. So they go safe harbor, which allows us to drop our fee to $1,000. So typical all-in upfront pricing is around $2,100 on average. But again, when you factor in those tax credits, most of our clients are able to recoup all of their fees. Again, just comes down to the number of employees you have.
Okay, so $2,100 to get started, and then what do you think it is annual basis or however that goes?
It depends on the asset size. Our $1,000 annual fee that was included in that $2,100 drops as your plan grows. So eventually that fee would go away, and all that's left is the employee to pay a $25 per year fee out of their account, and a ERISA bond fee of $100. So if you sponsor a 401k plan, the IRS requires you to get an ERISA bond. It's an insurance bond that protects the plan if there's any fraud on the employees' accounts. So you have to get one of those, even though we're, of course, going to protect from that happening. And so we can get that through our insurance broker, generally cheaper than you can for $100 each year. Every year there's going to be a reoccurring $100 fee, which the employer can pay or pass to the employees' accounts to pay. So $100 ERISA bond fee again, and the $25 per participant fee, which the employee pays out of their account.
Okay, so that's pretty cool. What about how long does it generally take to get something set up?
Right now, for new plans, so no prior plan that we're going to be taking over, a brand new startup plan, average time to get started once we have your return paperwork is 12 business days. So it's a very robust process to get you up and running. And that includes a installation call each week as we take you through the installation process. So usually there's only 2 or 3 calls at most. And there's also a call to train whomever the person is responsible for uploading the payroll data to our website. So we're going to take you through a training to make sure that you're comfortable with that process. So 12 business days is the average right now.
Quick question about employer contributions. If the employer contributes, does it have to be an equal amount to each person? Or can that vary?
Yeah, this is Josh. So it depends on the employer contribution type. So if we're talking about a payroll by payroll match, yes, it does have to be uniform or at least available to those who meet any eligibility you set up. So once they meet the eligibility, if they contribute, you have to match whatever the match formula is to everybody. Separate from that, you could also do an employer non-elective contribution, sometimes called a profit-sharing contribution. This one we can discriminate. The IRS allows us to give most of the money to those who are called highly competent employees That's your owners or family members of owners. So we can generally funnel mostly around 80 to 85 to 90% of it to those highly comped employees. So depending on which type of employer contribution you're talking about, you can or cannot discriminate.
And this is Dennis. And also, there is a match, so I mean, if you do like a safe harbor matching contribution, you're only putting in funds for those who are contributing. That's another way where when we have that initial interview with you, we really discuss the census, the employees, and, maybe get an idea on, I mean, we don't know what will happen, but what deferral rates would be, and, try to give you an idea as to what your match costs would be. But certainly offering the safe harbor match, not only does it, reduce the administrative costs, but it really just allows, as Josh said, the employers to put in up to $26,000 of their own salary deferrals, and without having to do any of the testing that would be involved if you did not have a safe harbor plan.
I'm a small business owner and I want to get a 401k going because it's a great thing. What maybe weekly or monthly typically see the employer cost being as far as, I got my payroll and it's $10,000 a month or whatever, or a week, whatever it is, and how much, what's this going to cost me as far as matching folks and stuff? And I know you're saying it's how you tailor the plan, but is there some sort of average or something that you guys see?
Yeah, this is Josh. I would say, the average would be, if you're doing safe harbor, it's 4%. That's typically about the average. You can go lower than that to about 3%. That's about as low as you could go, is 3% of payroll. 4% is probably the average each payroll period for the employer cost.
So that's your match. That's matching folks? Is that what you're telling me?
That's right.
Yeah, that's just matching, again, the people who are contributing. If they're not going to put money away, then you don't put anything in for them.
Right, but I was just trying to figure out, people ask me that question.
Like, if you had 3 people, can you keep it going? Or is there a number where you have to shut it down?
Yeah, there is not a limit. So you can have one person contributing. It could be you as the owner and none of your staff would, and that's perfectly fine. I mean, if you have no participation, that's obviously something we want to address through education, and Dennis would help that, as well as using Transamerica's education team. But yeah, you could have a plan potentially with no contributors, but it kind of obviously defeats the purpose of offering it. So we would always try to educate as much as we can to get people to save. But there is no minimum in terms of, if you only have one participating employee, then we have to, shut down the plan. There's no rule like that.
Okay.
I mean, it's more assets, huh? I mean, it's assets kind of really drive everything. If we're able to get people to, let's say they've got Roth or IRAs, I should say, or prior employer's retirement plan assets sitting elsewhere, and they can move it into this plan, I mean, that helps everybody. It helps the overall pricing of the plan, and I think simplifies your life too. The 401k plan will accept rollovers. And so if you have an IRA on your own invested wherever, you can transfer that IRA into the 401k plan. Talk to the employees and or the employer, and just, we would basically just need a copy of the statement or wherever your IRA is. And if you want to, you can transfer it into the 401k plan. As I said before, I mean, that really reduces your pricing. It helps the pricing of the plan going forward.
So, Jeff, for those of us that use you guys for payroll, I would assume that, once it's set up, your payroll team there would just kind of handle and manage that relationship. So, and get reports over to them. Is that correct?
Yeah, that's kind of the point, right? Just make it seamless, easy button. Don't worry about it. Just do it. One less thing for you to do. Unless you want to do a bunch of stuff, that's okay.
Yeah, no thanks.
All right. Well, guys, thank you very much for joining us. And thank you, Josh and Dennis, for presenting today. Very informative. And you guys who are on the call can always get out and get back in touch with me, and I can connect you to Dennis, or you can connect with Dennis directly if you captured his information on here, and I can send you some follow-up information. So we may have another one of these if you want to join again, but primarily be for people who have not heard this yet. And if there's no other questions, thank you all for your time today. We appreciate it.